Hey everyone, welcome back to Corporate Decoder, the place where we decode the world of business one filing at a time. And let me tell you, this latest report from Lindblad Expeditions Holdings Incorporated involves some pretty wild journeys, both on land and sea. So stick around as we unpack their latest financial story. And hey, if you love getting these insider looks at how companies really work, make sure you subscribe and join our Discord community linked in the description below for even more discussions. Lindblad Expeditions Incorporated, a name synonymous with adventure travel, has just dropped its annual report for the year ending the 31st of December 2025. Typically, these filings can be dense, but we're going to cut through the jargon and focus on what really matters, the money, the strategy, and what it all means for the future. Let's dive straight into the numbers. In 2025, Lindblad brought in a whopping $771.0 million in tour revenues. That is a solid 20% jump from the year before, showing they're pulling in more adventurers than ever. What is driving this growth? Well, they sold more trips, nearly 13% more, and travelers are paying a bit more too. Likely due to changes in the types of trips offered and a general increase in pricing power. They've also fully integrated the Thomson Group, which they acquired in 2024, into their yearly results, adding a significant boost. Of course, more trips mean more costs. Their cost of tours, which includes everything from fuel to salaries for the ship crews and guides, went up by 15% to $418.0 million. While this is a big number, it is actually growing a bit slower than their revenue, which is a good sign. It tells us they're managing their expenses pretty well as they expand. Now, let's talk about profit operating income, which is what is left after their main business costs. Really jumped. It went from $21.6 million in 2024 to $45.5 million in 2025. That is more than double a 111% increase. This is fantastic news, showing that their growth is translating into real profit. However, when you look at the bottom line, the net loss, it tells a slightly different story. For 2025, the net loss was $24.2 million, which is actually a bit better than the $28.2 million loss in 2024. Despite a strong increase in operating income, the company still ended up with a net loss. This often happens when you factor in interest payments on debt, taxes, and other non-operational expenses. Looking at their balance sheet, total assets climbed to $980 million by the end of 2025. That is a good chunk of change, showing the company owns a lot of valuable stuff, mostly their fleet of ships and their land operations. Now, let's talk about their debt and how they finance things. They have about $83 million in preferred stock. This is a special type of stock that has certain advantages over common stock and can sometimes be a bit tricky for investors. What is interesting here is that as of late 2025, there were still 62,000 shares of this preferred stock outstanding. But here is a key detail, that by February 2026, all of it was converted into common stock. This is generally a positive step as it simplifies their capital structure. On the debt side, their story got a major update in August 2025. They issued $675 million in new notes that carry a 7% interest rate. This was a big move, primarily aimed at paying off older, more expensive debt. It is like refinancing a mortgage to get a better rate. This action shows they're actively managing their debt load to save money on interest payments. Financially, cash is king, and by the end of 2025, Lindblad had $256.7 million in cash and cash equivalents. That is a healthy increase from the previous year, giving them flexibility and a buffer for operations and investments. Let's talk about their growth strategy. Acquisitions played a big role. In 2025, they spent nearly $20 million on acquisitions, mainly for Torcat Enterprises Limitada, which added 2 more vessels for their Galapagos operations. This is smart growth, expanding their footprint in a core market, and in 2024, they acquired Thomson Group for $30 million, which really beefed up their land-based offerings. These moves show a clear strategy to grow both parts of their business. Breaking down their performance, the Lindblad segment, which focuses on their expedition cruises, saw tour revenues jump 17% to $495.6 million. They also saw a significant improvement in occupancy, reaching 88%, up from 78% in 2024. This means their ships are fuller and they're making more money per trip. The Land Experiences segment, which includes brands like Natural Habitat and Classic Journeys, also had a fantastic year, with tour revenues soaring 24% to $275.4 million. This segment is clearly a growth engine for the company. They're not just adding more trips, but also increasing their prices, which is a great sign of demand. This segment's operating income really shone, jumping 57% to $38.4 million. It is clear their land-based adventures are a major profit driver. Now, even in the exciting world of adventure travel, companies have to deal with the unexciting but crucial world of cybersecurity. Lindblad takes this seriously. They have a cybersecurity team and even use a third-party expert, a virtual chief information security officer. This setup involves frequent reporting to executive management and the board, which is a good sign they're not overlooking this critical area. They're using industry standard practices and regularly assess their systems for vulnerabilities. Of course, no company is without its risks, and Lindblad has a lengthy list. They're exposed to global economic downturns, which can reduce demand for travel. They also face competition from other travel companies and even other leisure activities people choose. Plus, like any company operating globally, they're subject to geopolitical events, travel restrictions, and even the impact of climate change on their destinations. Their debt load is also a significant factor. With $675 million in debt as of the end of 2025, they have substantial payments to make. While they managed to refinance some of this at a lower interest rate, it still means a large chunk of their cash flow goes towards servicing this debt. Looking at their overall strategy, Lindblad is focused on delivering exceptional guest experiences, which is key in the premium travel market. They also have a strong revenue management strategy, with many bookings made well in advance, providing good visibility into future earnings, growing net yields, which is basically how much profit they make per GUS, and elevating brand awareness are also key goals. They're expanding thoughtfully with new ship acquisitions and strategic purchases of land-based companies, which is a smart way to diversify and grow. And a quick check on their internal controls this year is positive. Their independent auditors, Ernst & Young LLP, found that Lindblad maintained effective internal controls over financial reporting. This is important for investor confidence, showing that their financial statements are reliable. Now, for my take, Lindblad Expeditions is navigating some choppy waters, but they seem to be steering in the right direction. The significant revenue growth, particularly in the land experiences segment, is a major strength. Their focus on premium experiential travel allows them to command higher prices, a crucial advantage in a competitive market. The refinancing of some of their debt at a lower interest rate is also a smart financial move. However, the persistent net loss is still a concern. While operating income is strong, the debt burden and other expenses mean they aren't yet consistently profitable on the bottom line. The risks associated with the travel industry, like economic downturns and geopolitical instability, are always present and could significantly impact their performance. Their asset base, heavily weighted towards their fleet and operational assets, is solid. The expansion through acquisitions is strategic, and it is paying off in revenue growth. In conclusion, Lindblad Expeditions is a company with a strong brand, a clear strategy for growth, and a dedicated customer base. They're successfully increasing revenue and improving occupancy in their cruise segment, while their land-based operations are booming. The key challenge will be to continue managing their debt effectively and to translate their strong operating performance into consistent net profitability. They're not out of the woods yet, but the trajectory is promising. Alright, that is our deep dive into Lindblad Expeditions Holdings Incorporated's 2025 annual report. What do you think about their financial health and their strategy for the future? Let us know your thoughts in the comments below. If you found this breakdown helpful, smash that like button, subscribe for more corporate dissections, and join our Discord community linked in the description. Thanks for watching, and we'll see you on the next episode of Corporate Decoder.